Hello and welcome to the Basic Tax Course Part 1 Roundup. Session 13 was the final session of Part 1 of the Basic Tax Course, and this wrap-up segment is here to help you review the following final assignments associated with Part 1 of the course. Number 1, Session 12 Quiz Answer Key. Then we're going to move on to the Session 13 Homework Answer Key, and finally the Session 13 Quiz Answer Key. At the conclusion of this review session, you are going to need to complete 2 midterm exams as follows. Number 1 is the open book midterm exam, and number 2 is the closed book midterm exam. Let's talk first about the open book midterm exam so you know what to do and what to expect. The open book midterm exam involves preparation of a tax return for a character named Buffy Vampire Slayer. This exam is similar to the homework and classwork assignments that you have been completing throughout the course. The main difference is this is going to be a much bigger tax return than you're used to preparing. Please complete the open book midterm exam by going to the midterm exam session. Open and print the examination problem. Because this exam is open book, you may take as long as you want to complete the assignment. You can also use the Q&A forum to post questions and receive answers from your client, Buffy. Now, since Buffy is your client, however, you cannot ask her tax questions. After all, she is paying you to prepare her tax return. Who would you be to ask her tax questions? You may, however, ask her the types of questions you would ask a tax client. Now, if you have a tax law question, post that question into the Q&A forum of the session where that tax law topic was covered. For example, if you are unsure as to whether Buffy can claim a particular dependent, you should review the material we covered in Session 2, because that's where we discussed dependency. If you still have a question, you would post your dependency question into the Session 2 forum. But of course, your Session 2 forum post should not be about whether or not Buffy can claim a particular dependent. It would be a generalized question about dependency that would help you determine whether Buffy can claim a dependent. Next, when you are finished preparing Buffy's tax return, you will enter the line amounts from the tax return that you prepared for Buffy into the midterm exam assignments page. Be aware that the test, once you have started it, is timed. You will have 1 hour to enter your answers. When you are finished entering your answers, finalize the test to receive your open book midterm exam score. The second part of the midterm exam is the closed book portion of the midterm exam. The closed book midterm exam is similar to the quizzes that you have been completing throughout the course. The Oregon Board of Tax Practitioners requires that the closed book exam be a proctored test. If you have not already submitted a proctor application to Pacific Northwest Tax School, you should do so at this time. Please remember that if you live within 1 hour's drive of our office, that is our tax school offices here in Portland, you will need to take your examination at our offices. And to schedule your examination, you should contact Nancy Elshire at ocsupport@pnwtaxschool.com. If you live more than 1 hour drive from Portland, you can use a proctor. Pacific Northwest Tax School must approve your proctor. Both you and your proctor must submit applications to our school. After we have approved your proctor, you should contact your proctor to make an appointment to take your test. There is a time lag there. Of course, you have to submit your proctor application. We have to review it. We have to approve it. We then have to ship the examination to the proctor who would administer it. So it's a good idea to immediately begin the proctor application process so that all of that is ready for you when you are ready to take the test. Now, when you are finished completing both the midterm and final exams for the Basic Tax Course Part 1, you will be ready to begin Part 2 of the Basic Tax Course. Part 2 begins with Session 14. And moving on now with the first, we're going to take a look at the answer key for the Session 12 quiz. In the Session 12, we examined many of the federal credits that affect individuals. We by no means covered all of them because we have reserved federal credits that affect families with children for Session 13. But with Session 12, we did look at many of the credits that are claimed by individuals that are not affected by whether or not you have children. And with question number 1, we took a look at the mortgage interest credit. Question number 1 reads, you can claim the mortgage interest credit if you own and occupy a home in a low-income neighborhood. Well, we never said that anywhere. Now, lots of credits really are directed at people who are low income, but the mortgage interest credit certificate has nothing to do with being low income. It never mentions that anywhere at all. In fact, the mortgage interest credit certificate is nothing that you apply for as a part of the tax return. It's something that you apply for when you're purchasing your home. So at the time you purchase a home, and it usually needs to be a qualifying home, and the definition of qualifying home is usually your first home in the last 10 years, or the last 2 years rather, and that your income has to be within the parameters set by your city or state. If you go through all of that process, apply for the mortgage interest credit certificate and receive it, then you can qualify for the credit. So to say that you can claim the credit if you are in a low-income neighborhood, that is simply a false statement. You must hold the certificate, which is applied for at the time you purchase your home. Password number 1 is dwarf, D-W-A-R-F, dwarf. The next question we're going to take a look at is question number 5. The credit for prior year minimum tax is a refundable credit, a non-refundable credit, or both? And the answer is it's both. And if you take a look at the Form 1040, there are 2 different places on which you can claim this particular credit. It's available as a line item under the non-refundable credits section of Form 1040, and it's also listed under the non-refundable credits section of the Form 1040. Now, we didn't focus a lot of time or energy talking about the non-refundable versus the refundable credits. In our 1040 CPE series, we spend 4 hours talking about alternative minimum tax, and we cover the refundable and non-refundable credits in quite a bit of detail there. But I would just say at this point it's safe to know that there are refundable and non-refundable versions of the credit, which is why question number 5, item C, is the correct choice. The next question in line is question number 10. The maximum lifetime learning credit you can claim is $2,000 per eligible student that you claim on your return. That is a resounding false. Now remember, there are 2 education credits. One is the American Opportunity Credit, and the other is the Lifetime Learning Credit. The Lifetime Learning Credit is a maximum of $2,000 per year, regardless of the number of students for whom you are claiming the credit. There is no maximum number of students on which the credit can be claimed, but there is a total dollar value that is a maximum dollar value, and that's $2,000. Number 13, which of the following statements is true? The American Opportunity Credit is 100% of the first $4,000 of qualifying expense. That is false. It is actually 100% of the first $2,000 of expense and 25% of the second $2,000 of expense. Item number B, the Lifetime Learning Credit is 20% of the first $2,000 of expense. That's false too. It's 20% of the first $10,000 of expense. And finally, item number C, with 3 qualifying students on your return, you could claim a combined American Opportunity Credit of $7,500 if each qualifying student has $4,000 or more of expense. That one's true, and I've had clients who've gotten that too. Not at all, it's hard to spend $4,000 a year on a student, and it's not hard to have 3 students in the same house. So C, you would have a $2,500 maximum credit under the American Opportunity Credit, and you multiply that by 3, and that's where you get $7,500. So that concludes the review of the Session 12 quiz answer key, and we're going to begin the review of the Session 13 homework answer key. And of course, Session 13 had 3 separate homework assignments. The first homework assignment was to determine the earned income credit for each of 4 different situations. Let's take a look at situation number 1 first. Jessica, age 24, is single. She has no children and is not a dependent of another filer. Her AGI is $8,000. How much is her earned income credit? Well, the answer to that one is 0. She is too young to claim the earned income credit without a qualifying child. In order to claim the EIC without a qualifying child, you must be age 25 or higher and not yet age 65, and Jessica is simply too young. Question number 2. George, age 32, is married filing separate. George lived with his 3 children, ages 5, 7, and 9 all year, and they all qualify as his dependents. His AGI is $20,000. How much is his EIC? It is also 0. You cannot claim the earned income credit when your filing status is married filing separate. Question number 3. Martha, age 65, is single. Her 2 grandchildren are ages 8 and 10 and lived with her for 8 months during the year. Her AGI is $18,590. Well, in order to claim the earned income credit, she has to have a qualifying child who lived with her in her home for more than half the year. And this is, of course, the case. They were with her for 8 months, which is more than half the year. She is age 65, but that doesn't matter because she has a qualifying child. So we go to the tables, and in this case, the tables based on her earned income level of $18,590 are on page 50 of the manual. So on page 50, we find her income, which is at least a certain amount, but less than a certain amount, and we go down until we get $18,590 falling between those 2 points. So flipping to page 51 of the student manual, we will find that we're looking for a filer whose income is $18,590. That $18,590 is at least $18,550, but it is less than $18,600. So we simply follow this table across and we get the amount of earned income credit when there are 2 children, and that amount is $4,715. And finally, question number 4. Mr. H is age 65 and Mrs. H, who is age 66, lived together all year. Their daughter, Sally, age 25, lived with them along with their grandchild, Bob, who is age 5. Sally's AGI was $16,575 and Mr. and Mrs. H's AGI was $46,000. Well, the first situation here is that Mr. and Mrs. H are not able to claim earned income credit for 2 reasons. The first reason is that their income is too high. If you go to look up EIC for a single child with income that high, you won't get anything. Even with 2 children, you get nothing. And their daughter is too old to qualify for them for the earned income credit. In fact, their daughter is not their qualifying child even. She's not a qualifying relative or a qualifying child because she fails obviously the age test for being a qualifying child, and she fails the gross income test for being a qualifying relative. But Sally herself does have a qualifying child, and she will be able to claim her qualifying child for the earned income credit. Now remember, there are some tiebreaker rules, and the tiebreaker rules are geared at family situations like this. If Mr. and Mrs. H have a qualifying child in their grandchild, Bob, and Sally has a qualifying child in her child, Bob, who wins? Well, the parent always wins. So even though Mr. and Mrs. H have higher income, Sally is the one who can claim and should claim Bob for the earned income credit because she is going to get it and her parents can't anyway. So let's move over to page 50 of the manual and look up her earned income credit. And you can see I've highlighted it. Her income is between $16,550 and $16,600. And the qualifying earned income credit for a single child at that income level is $3,094. So that completes the review of homework assignment number A for session 13. Let's take a look at homework assignment B. And of course, homework B and homework C were really the same character, all of the same income figures, the same children. The only difference was the filing status. And I created this problem really with the intention of showing you how the married filing separate filing status can take away that earned income credit. But when the earned income credit disappears, you can still see how the child tax credit is kicking in and benefiting Mr. Jack Spratt. So let's take a look at his finished return. And here we have Mr. Jack Spratt's return. In this example for homework assignment B, his filing status is married filing separate, so we do need to enter the Social Security number of his spouse in the space provided, and we also need to enter his spouse's name, Betty Spratt, in the space provided. He's listed his 3 children, Angelique, Dominique, and Veronique. They all qualify him for the child tax credit, so those boxes are checked. He has only one source of income, a W-2 in the amount of $21,000. We carry that income over, and on page 2, we claim a standard deduction for married filing separate of $5,800. We claim exemption deductions of 4 times $3,700, which totals $14,800. It reduces his taxable income down to $400, and his tax, if you look it up in the tax tables for married filing separate, is $41. He's allowed a maximum child tax credit of $1,000 per child, but his tax is so low that he will claim a child tax credit in the amount of $41, and that tells you he's going to be eligible for a refundable credit for some of that difference. Let's take a look at his Form 8812 and figure that out. Here is Jack's Form 8812, and we begin the form by entering 3 times $1,000. That's $3,000 being the maximum potential additional child tax credit that he can claim. We then reduce that by the amount of child tax credit that he has entered on line 51 of his Form 1040, and that leaves him with $29,059 as the maximum amount of additional child tax credit he could be eligible to claim. But we're not done. We do need to take a look at some other items. And one of those items we need to look at is the amount of earned income that he had. When we go over to his W-2, we can see that his W-2 shows $21,000 of income, but that we have a code Q on his W-2, which is non-taxable combat pay. The non-taxable combat pay can be used to increase his income for purposes of calculating the child tax credit as well as the earned income credit. So even though the W-2 says $21,000, we're actually going to enter $21,500 in the space provided and indicate how much of that $21,500 is because of the combat pay. We then subtract $3,000. That's showing in the instructions here. In order to claim the child tax credit or the additional child tax credit, Jack's income has to exceed $3,000, and the formula that you see here is the amount by which his income exceeds $3,000. So we take $3,000 from $21,500 and we're left with $18,500. We then multiply $18,500 by 15% and we get $2,775. His credit will be the lesser of line 3 or line 6, and in this case line 6 is the lesser number, $2,775. There's a separate computation here that goes on in Part 2 of the form. When a filer has 2 or more qualifying children, they can look to get a refund of their Social Security and Medicare tax withholding. And if we look at the amount in Box 4 and add to that the amount in Box 6, we get $1,187. And Jack can claim the greater of line 6 or line 9. And in this case, the greater number is line 6 at $2,775. So ultimately, Jack will claim an additional child tax credit of $2,775. We enter $2,775 on line 65. We enter his withholding from box 2 of his W-2 on line 62. He has withholding and credits in the amount of $39.75, and he will get all of that refunded. His refund is $3,975. And moving on with homework assignment number C, Jack in this assignment is claiming the earned income credit because we've made him single, and because he's maintaining a home for himself and his 3 children and he's not married, he's going to qualify for the head of household filing status. And now that he's head of household, he gets the earned income credit. So let's see how things change when he gets EIC. We go over to the 1040, we enter Jack Spratt, we check the head of household box, we enter his 3 children, his exemptions are 4, his income is still $21,000. On page 2 of the form, his standard deduction has increased to $8,500, and his exemption deduction is unchanged at $14,800. But ultimately, his income, his taxable income is 0, his tax is 0. He is not going to have any child tax credit on line 51 because his credits cannot be more than his tax. His withholding on his W-2 is unchanged, and his additional child tax credit is actually unchanged as well. The only amount that we really need to figure and enter is the amount of earned income credit he can claim. That is $4,838 based on his income and the fact that he has 3 qualifying children. In this case, you can see that the non-taxable combat pay election is not being made because actually making the election in box 64B would serve to reduce his earned income credit rather than increase it, and that is an option there. So let's go take a look at the earned income credit tables on this one. And of course, Jack's income is at least $21,000. So we go to the line that says $21,000. It is not more than $21,050. We follow the line across for 3 children. We get $4,838. Now he could make an election to include his combat pay for purposes of calculating the credit, but that would push his income up to $21,500 and would actually make his credit go down. So he's better off not making that particular election. He enters the $4,838 on the line. He adds up all of his withholdings and credits, and he has a refund of $8,813. So that concludes the review of the Session 13 homework assignment. It is now time to push pause on video playback to complete the Session 13 quiz. And since this is the final session before the midterm exam, I'm sure you would like to see a review of the Session 13 quiz answer key so that you can work on studying and preparing for the midterm exam. And therefore, we've got this little add-on segment at the very end of Session 13 where we're actually going to cover the Session 13 quiz rather than making you wait until after the midterm exam. So I have up in front of you now the Session 13 quiz. And we'll take a look at the most frequently missed questions and their appropriate answers. Beginning with question number 1. For a taxpayer who has 2 qualifying children, the maximum child care credit is $6,000. Well, that's a definite false. And the thing with this question, and many of the questions that are most frequently missed, is students are answering the question without reading it and then thinking about what the law has to say. Now, with the Child Independent Care Credit, we don't deal with a maximum credit amount per se. We deal with a maximum qualifying expense per child, and then that qualifying expense is multiplied by a decimal amount to arrive at the final credit. Technically speaking, if your income is above $43,000 and you have 2 qualifying children for whom you spent at least $3,000 each, you would have a maximum credit of $1,200. So it could be true that you could say, for most people with 2 kids, the maximum credit is $1,200, but that's not necessarily correct because it's still based on income. So rather, when we're talking about this particular credit, we go back and consider the qualifying expense. And therefore, the reason this is a false statement is because the maximum credit is not $6,000. It would be a true statement if it said the maximum qualifying expense was $6,000. So again, false. Moving on, the next most frequently missed question is question number 3. If Mary Lou files married filing separate, she cannot claim the child tax credit for her dependent child age 13. This is a false. And again, we're saying read the question and remember the rules. Now, for certain filing statuses, certain credits are thrown out and are not available, including the Child Independent Care Credit and the Earned Income Credit. But when it comes to the child tax credit, filing status is not a factor. Therefore, even though Mary Lou is filing married filing separate, she is still entitled to the child tax credit if she has a qualifying child who is under age 17. Well, she's got a dependent child who is age 13, that is under age 17, and presumably this is probably her son or daughter. But child is enough. Password number 2 is EMU. E-M-U. EMU. Moving on to the next most frequently missed question, question number 7. All of the following individuals lived with the taxpayer all year. The taxpayer can claim their dependency exemptions. Which of the following would qualify the taxpayer for the child tax credit? And so we offer you some options, and as you can see, option A is the correct choice. We have a 15-year-old niece. Now, assuming this niece meets all of the tests to be a qualifying child, she will qualify an individual for the child tax credit. Option B is incorrect. A 17-year-old daughter is not under age 17. She is age 17, and therefore B is not the correct answer. C, 13-year-old child of a friend. No, this person is not related. It's possible they could be a qualifying relative, but they would not be a qualifying child. And in order to qualify for the child tax credit, the child being claimed must be a qualifying child. And finally, D, 19-year-old disabled son. What's wrong with this? No, the son is too old. 19 is not under age 17. It's older than 17. So D is not the correct answer, but I should point out that a disabled son could qualify an individual for the Earned Income Credit and could also qualify an individual for the Dependent Care Credit, just depending on the level of the disability. So 7A is the correct answer. The next question in line, number 8. Which of the following expenses qualifies for the child and dependent care credit? And we provide option A, payments to a housekeeper who also babysits the child while you are grocery shopping. Definitely not. The IRS even provides that somewhere in its examples or illustrations as a description of something that is simply not allowed. It's not allowed for 2 reasons. One is you're paying a housekeeper and you don't get a credit for the cost of housekeeping. The second problem is you didn't pay the expense to go to work. Going grocery shopping is not work unless you happen to be a professional shopper, right? So A is simply not a correct choice. Then we have B, payments to your 21-year-old dependent son. No, the son is not under age 19, but he is a dependent, and you may not claim a credit for for money paid to a person who is your dependent. C, payments to your sister who lived with you all year but is not your dependent. That would be fine, assuming she is not a child of you who is under age 19, and she's your sister, so she's not your child, and she's not your dependent, therefore that would be fine. C is a correct choice. And then D, payments to a daycare center for the care of your 13-year-old daughter while you are at work. No, child who is age 13 is not under age 13, and the requirement is that the child be under age 13 unless you can show the child is incapable of self-care because they're disabled. The next question in line is question number 16. Assuming Jolene meets all of the requirements, she can claim earned income credit on her dependent brother who does not have a Social Security number but lived with her all year. I don't think so. That's a definite false. You are not allowed to claim the earned income credit for a person who is not in possession of a valid Social Security number. So if you have a brother who is in the country without a Social Security number, he simply is not entitled to the earned income credit. Now again, you have to be looking at the credit in description here. EIC requires a valid Social Security number. However, the child tax credit, head of household filing status, and the dependency exemption are not tied to legal residency in the United States or issuance of a valid Social Security number. So as long as a child lives with you as a member of your household inside of the United States, that individual could qualify for the child tax credit, head of household filing status for you, and dependency, but never the earned income credit. The next question in line is question number 22. During the year, Sam paid $700 in child support to his ex-wife, Becky. According to their divorce decree, Becky has custody of their child, but Sam can claim their child's dependency exemption if he pays at least $700 of child support during the year. Who can claim that child for EIC? And the choices are the parent who has physical custody of the child for more than half the year, or either parent, or no one. Well, technically speaking, it is probably Becky who has physical custody for more than half the year, but we haven't offered up her name. That would have been the logical choice. So what we're left with is you can't say either parent because the earned income credit can only go to the parent with whom that child lived with for more than half the year. So ultimately, you could argue that this is a badly worded question, that you're not given enough information, or you could say, well, it couldn't possibly be either parent because it's only going to go to the parent who legally qualifies. And the parent who legally qualifies is the parent who had the child for more than half the year, and that is option A. Password number 3 is Everglades, EVERGLADES. Everglades. And the last problem we're going to look at is the mini problem. Mini problems, we're throwing them into virtually every session, or as many as we can, because universally every year when the Oregon Tax Board releases its pass rates and most frequently missed questions, the mini problems seem to be the most frequently missed questions. And so these are problems that we feel people need lots of experience handling them. Now, if you're studying for the federal test, mini problems are probably not going to be a big component of that test, but still they can be a worthwhile learning tool. And here we have the mini problem involving Hermione, who is single. During the year, she paid Hogwarts after-school daycare $4,000 for her 6-year-old son, Jason, and $3,500 for her 9-year-old daughter, Samantha. All child care costs were paid to Hogwarts School. Hermione's federal AGI and earned income is $33,000. The amount of tax on her Form 1040, line 46, is $1,406. Prepare the Form 2441 for her and then answer the questions, which is essentially what's on the lines. So let's pull up that answer key. And here is Hermione's completed 2441. We begin by entering the name of the school to which she paid child care expenses, the identification number of the school, and the amount of money paid to the school. We then show how that money was split between her two children, with Jay Granger having $4,000 of associated expense and Samantha having $3,500 of associated expense. Remember that the maximum qualifying expense cannot exceed $6,000, so any combination of these two amounts, the amount for the first dependent and the amount for the second dependent, can never total more than $6,000, and so we've limited to $6,000. The next step is to enter earned income. We need to show that the qualifying expense is equal to or greater than the earned income, and we've done that. We take the lesser of the two numbers, in this case $6,000. We then look for the amount of income shown on line 38 of the Form 1040, which is adjusted gross income, and we find the corresponding amount on the table. The amount is $33,000, but it is not more than $33,000, so we follow the table across and we come up with a decimal factor of 0.26. We enter 0.26 on line 8, multiply that amount by $6,000, and we get $1,560. Now, I did want to draw your attention to the fact that on Hermione's Form 1040, the total tax showing on line 46 of her 1040 is $1,406. That's her tax before credits, and she, of course, cannot claim credits that exceed her tax. So we enter the tax on line 10. We then go over to line 9 and enter 26%, or 0.26 times 6,000. We enter 1,560 on line 9. Her tax is less than the allowed credit, or the calculated credit, and so her credit is limited to her tax, and we enter $1,406 on line 11. So that concludes the review of the Session 13 quiz, and this is the conclusion of Part 1 of the Basic Tax course. At this point, it is now time for you to complete the midterm exams. First, begin by completing the tax return for Buffy Vampire Slayer, and once you're finished with that assignment, it is time to take your closed book midterm exam. Thank you, bye-bye, and I'll see you at the beginning of Session 14.